So markets seem to be recovering from yesterday's announcement by the American president that he would impose a 50% tariff on copper imports. So is the market growing wary of all this tariff talk? Let's bring in Kachur. He's a portfolio manager and senior investment manager with Wellington-Altus Private Wealth. Thanks for joining us today.
Thanks for having me.
When you look back at the last 6 months on the market, what has been your key observation?
Well, I think the last 6 months, it's more about how the market is seemed to be seeing through some of these tariff threats, and that maybe Donald Trump in some of these announcements is more bark than bite. And there's a lot of rhetoric to it all, but then very rarely do some of the worst case scenarios end up coming through. So I think that's, case in point with a lot of these trade announcements and that. I do think that the market's grown wary of it. And, right now the market just seems to want to move higher. And I think that, the odd Trump announcement might set that back a little bit. But for the most part, stocks and the market as a whole seem to want to move up.
So are investors kind of just tuning it out?
Yeah, I think so. I mean, investors or portfolio managers or, institutional money, I think, for a lot of people want to take a more medium and long-term approach to investing. And I think, throughout those longer tenures, you're going to see ebbs and flows and peaks and valleys. And generally, you don't want to, overreact to news, and especially in this current, regime that we're under. So I think that, earnings still matter, and, outlook and rate cut forecasts and all those types of things. And certainly, days like yesterday with a copper tariff announcement, that can, potentially swing the market. But I find, more often than not, those swings are very temporary in nature, and I think you have to be careful with exposure and chasing something due to an announcement, as I think it can come back to bite you.
Let's talk about the second half of the year and where you see the markets going. We've seen some record highs now. South of the border, the TSX has been routinely hitting record highs for a few months now. What do you foresee?
Yeah, I think there's a lot of positive that's already priced in. So, given the rebound of the last, let's say, 3 months now, I wouldn't be surprised to see a little bit of a consolidation period, or maybe even a small pullback. But for the most part, I think that the market wants to move up. It seems like the only thing that has been stopping the momentum forward has been some of these tariff announcements and otherwise. But we all know that, markets don't just go in a straight line, and, they don't go up forever. But I think in general, the market should end the year higher. And, that's with a big caveat of course, if there's anything crazy on a geopolitical or war or, tariff kind of announcement, that kind of changes things, of course. But my general direction is up, and I wouldn't be surprised to see the S&P push through probably like 66, 6,700 here over the next few months. And whether that's the high for the year, or, if we kind of get one of those melt up scenarios and push through 7,000, that wouldn't necessarily surprise me neither.
Let's talk about NVIDIA, which hit that $4 trillion mark today, making it the most valuable company in history. Do you still see technology as pushing the momentum for the second half of the year?
I do, yeah. I think, if you look at some of the actual laggards in the technology space, it's some of the larger cap companies like the Apples and Googles and, Microsofts of the world. So they haven't really participated as much in, this recent rally as maybe names like NVIDIA or, some of the other names that are a little bit more volatile. So from a charting basis, a lot of those charts are starting to look pretty good, and I think that we'll see a catch-up period where some of the mega cap tech start to catch up to the rest of the market, and I think that will kind of push the next leg up for the S&P and NASDAQ as a whole. So I think NVIDIA will continue to be a leader. It's just so far ahead on some of these GPUs and graphics and AI chips that, you know, it's not necessarily ready to be caught by any of its competitors yet. So I wouldn't be at all surprised to see NVIDIA as a company, you know, continue to grow their revenues, and as a stock most likely continue to go up. But I think the breadth is going to continue to expand, and, you know, there will be a lot of companies that are getting good returns for investors here as we move forward.
Where are you looking to invest at this point then? Are you sort of piling some money into the tech stocks? Would you invest in NVIDIA even at where it is today, which, as you mentioned, you think it's going to climb, but it's at a historic level? What would you do there?
Yeah, I think, you know, from a wide-ranging perspective, I do like some of the ETFs that track some of the mega cap tech names. So I think there's a lot of options across different providers as it relates to that. From an individual stock positioning, like a lot of names have just recently, you know, went from a technical perspective over a golden cross, which technically that generally means good things for the next kind of 3 to 6 months, and that some of these stocks will be able to continue. So I think there's no shortage of names out there. Would I be a buyer of NVIDIA right now? I'd have to look at it. Like, it's been such a long tenured position for myself and clients that, you know, I haven't needed to buy into it just because we've had enough waiting. And if anything, I've probably added to some diversity in the sector, adding some other names. But as a whole, like last time I looked, I think our target on NVIDIA was kind of around, you know, 200, maybe 190. So there's still some upside there, but it certainly, you know, is going to move around. In some cases, you know, these stocks get priced to perfection. And but the general rule, specifically with a company of NVIDIA, is if the stock falls, you know, 5 or 10%, those are generally good buying opportunities, because, you know, they're some of the best companies in the world.
Very quickly, what else are you investing in at this time? What are you looking at?
So I have a preference for the US, and I know that the Canadian markets have done quite well this year, but to me, I still think that, you know, a lot of the best companies in the world are domiciled in the US. So names that I like, a lot in the tech space, as we talked about. I was on Market Call not too long ago, and I think had AMD and Estee Lauder as top picks, and they've done very well, 25 and 40% in the last month or so. I think the US banks are looking pretty good, although I don't blame people if they just want to stick close to home in Canada with the banks. But yeah, even like some of the retail names that have traditionally, or at least for the last year, been underloved, like a Nike or some of those, like they're all starting to what looks to like turn the corner. So I don't think there's any shortage of opportunities, and it's really just a matter of if you're chasing growth or if you're trying to find something that maybe hasn't participated and is more in the value landscape and trying to give returns by, you know, finding the one that is going to pop next.